The UK really is a special situation at the moment, I think, because of the Brexit overhang that really puts off international flows into the UK. Actually, when we look across the reporting season that we've seen so far, the consumer's been a bright spot. In Europe, when you look at high-end luxury goods, when you look at some of the staples companies, you've seen pricing power come back, volumes be pretty resilient, and obviously we had strong US consumer confidence numbers as well recently. The UK, I think there's an element obviously of bad news has been continuing for so long, but ultimately Brexit really will determine the path, and our sense here is, this malaise that's crept in post the extension is going to prove problematic.
Grace,
for attracting
I wonder if I may
flows.
disagree with you at this in the politest way possible, because I remember us speaking to one of the, I've forgotten his name, the chap we used to interview, UK retail economist, about 20 years ago, 15 years ago, and he said to me, and I'll never forget him saying to me, write off the UK consumer at your peril, Mr. Sedgwick, and I was ranting away as usual, saying, oh, they're all doomed because they're consumer habits. So you say Brexit will ultimately dictate our destiny, perhaps as a country. I think consumer debt will, and debt levels as a whole. So I don't know, maybe both. I don't know. Maybe we can.
When it comes to the listed markets and the UK large cap banks, when we're thinking about debt, then actually they're well capitalised. They've actually lended quite prudently in recent years,
right.
And we've actually seen some super results coming out of some of the UK
banks. And yet I look at Mr. Bramson. Knocking on the door of Mr. Staley at Barclays, and their share price doesn't look too great as well. I look at the fact we've got changes at the top at Royal Bank of Scotland that has got the most underwhelming net interest margin I can see out of all the major banks as well. And now I see this morning that Lloyds is actually restating its capital buffer. I mean, to be honest, we're not going a big way away here, but they, under guidance from the PRA, they've had to say that their ring-fence bank will be 200 basis points systemic risk buffer, which is less than 210 previously, which included group capital guidance, etc. Anyway, slightly less capital there. I see issues, is all I'm saying.
Yeah, our sense when you look at UK banks relative to Eurozone banks is that the capital situation is strong. And we'd point to evidence of the fact that you've seen increased dividends, increased share buybacks just as recently as when they reported in the first quarter, which really did drive the markets. That's what the market wants to see, not just from the banking sector, but from across the industry, across the market overall. Share buybacks and greater capital returns are really being well rewarded by shareholders.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.